Every time the world gets more uncertain, money flows from risky asset to safe haven like gold. For NRIs sitting in the UAE, US, UK, Canada, keeping a portion of your portfolio in silver in 2026 deserves serious consideration. Today, the ratio is close to 100, which means gold is currently 100 times more expensive than silver. Does that mean you put everything into silver? The answer is no. The third option to invest in gold is via mutual fund. Again, does it mean you should bet your life savings on gold? Right now, the answer is no. Let me ask you something. You have been sitting outside India in Dubai, in the US, Canada, watching the price of gold go absolutely crazy. It went from 64,000 per 10 grams to over 1.7 lakh, 2.6x in barely 2 years. You have been watching that happen and thinking, did I miss it? Is it too late? Should I have bought more? And now, everything is going in the world war, Trump situation, central banks, Iran, everything is saying gold is going even higher. But here's what nobody is actually telling you as an NRI. The rules around how you can buy gold are very different from a resident Indian. There are options that don't exist for you. There are tax traps waiting for you. There are costs of the gold that you are purchasing. There are hidden costs which you are not even aware of. Today, we are going to fix all that. I am Susheedha, and in the next 15 minutes, I'm going to give you the most honest and complete guide to gold and silver investing for NRIs in 2026. In this video, we will talk about why is gold going crazy? The silver story, the one no one is talking about. Is it too late to buy? So now we'll be speaking about the complete guide using which an NRI can invest in India in gold. If you want to start your gold or silver investment journey, download the SBNRI app from the link given in description. Complete your KYC in minutes. A dedicated wealth manager will be assigned to you who will understand your country of residence, your tax situation and your goals. And then will give you the personalized support. Before we talk about whether you should invest, let's first understand why gold has done what it has. Because if you understand the why, you will exactly know what to expect next. Here's the short answer. Gold isn't going up by some random market rumors. It's going up because three very powerful and very structural reasons are there. Talking about reason one, the world's central banks, they have been continuously buying gold like crazy. Since 2022, central banks around the world in China, Turkey, India, Poland, they have been continuously buying approximately 1,000 tons of gold every single year. That's not retail investor, that's the government. And the government don't buy in panic, they buy with strat. Why? Because they are slowly moving away from holding US dollars as their reserve currency. And when they don't want dollars, they want gold, which is stable. This is what experts call de-dollarization. And this is very real, very big trend. Talking about reason number two, the world is more uncertain than it has been since World War II. Russia-Ukraine war wasn't enough for the world. We saw US-China trade war and now US-Israel action against Iran, which has sent shockwave across the entire Gulf nation, including countries where millions of you watching this right now are based. UAE, Kuwait, Qatar, all of these have been impacted. Every time the world gets more uncertain, money flows from risky asset to safe haven like gold. Gold is the oldest safe haven on earth and it's not a new story. But the scale of it right now, it's extraordinary. Talking about reason number three, the interest rates, they are falling. Here's something most people don't understand about gold. Gold competes with interest. If your fixed deposit was giving you 7 or 8%, at that time no one wanted gold because at that time gold was paying you zero. But when interest rate fall, when the fixed deposit comes down to 3% or 5% and inflation is at 7%, suddenly gold starts looking very attractive again. Right now, the US Federal Reserve is expected to cut interest rates multiple times in 2026. Europe is cutting rates. Every rate cut, it makes the gold more attractive. The result of this, gold hits an all-time high of $5,595 per ounce in January 2026. In rupee terms, that's over 1.7 lakh per 10 gram, and it gave over 60% returns in 2025 alone, beating the stock market, beating real estate, beating everything. Banks, JP Morgan, one of the world's largest banks, is forecasting gold could push towards $6,000 per ounce by the end of 2026. Goldman Sachs has a target of $5,400. Wells Fargo says that it can even touch 6,100 to 6,300. Is a correlation possible? I would say absolutely. It's already come down from 55.95 to 52.72, a 6% dip. And again, it saw a raise today because of the war-like situation. The numbers, it grew, and now the gold is trading at $53.63 per ounce. So enough talking about gold. Now we'll talk about silver, because I think silver in 2026 is one of the important conversations that most NRIs are completely sleeping on. Silver did something remarkable in 2025. It went from around $28 an ounce all the way to $70, and that's a gain of nearly 150% in a single year. In Indian terms, it crossed 3 lakh per kilo. But here's the thing, silver isn't just the shiny metal anymore. Silver has transformed into something far more powerful. It's now an industrial metal that the entire future of clean energy and technology depends on. Here's the scariest part about silver. The world is consuming more silver than it can mine. We are now in the 5th consecutive year of global supply deficit. And here's why that won't change quickly, because about 75% of the silver is mined as a byproduct of other metals like copper and zinc. Silver miners can't simply double production because the price went up. The gold-silver ratio pays attention to this. There is a metric called gold to silver ratio. Historically, over the last 60-70 years, you could buy 60 to 70 kilos of silver for the price of 1 kg of gold. That was the long-term balance. Today, the ratio is close to 100, which means gold is currently 100 times more expensive than silver. This tells you historical standards. Silver is significantly undervalued relative to gold. Now, does that mean you put everything into silver? The answer is no. And here's why. I'll be honest with you. Silver is volatile. If gold falls 10%, silver can fall 20%, 25%, even it can go to 30-35%. It's the high beta cousin of gold. Higher upside, but also higher downside potential. So if you are going to allocate to silver, go in with open eyes. But for NRIs sitting in the UAE, US, UK, Canada, keeping a portion of your portfolio in silver in 2026 deserves serious consideration. The big question, is it too late to buy? Okay, this is the question I know every single one of you is sitting and thinking. Gold has gone from 35,000 rupees to 1,74,000 rupees in the last 10 years. Did you already miss the train? Let me share something that a 25-year veteran commodity expert said, and this stayed with me. He said, the direction is clear. Gold is going north, but speed of rally has surprised everyone, including the experts with 25 years of experience. What he meant is, yes, gold has rallied fast, so fast that in normal correction is possible, maybe 5-10%. That's not out of the question. If you are someone who invests a large lump sum and sees it dip 10% in the first month, are your nerves strong enough to hold? If you can, then you can invest. Here's another way to look at it. The cost of producing 1 ounce of gold is roughly $1,200. Today the price is $5,200, $5,300. That's almost 3x the cost of production. Historically, gold trades around 1.3 to 1.5x of the production cost. We are at 3x the highest in the history. Does that mean it can't go higher? It can, because the world is not stable, the time is not peaceful. Every new conflict, every rate cut, every central bank buying more gold, it adds a lot of support to this ratio. But again, does it mean you should bet your life savings on gold? Right now, the answer is no. The smartest approach for 2026, it would be, if you don't have gold in your portfolio, then you start slow, month over month. Don't wait for the perfect price. Don't you wait for the perfect strategy. If you already have some gold, review it. A well-diversified portfolio in 2026 should probably have somewhere around 10 to 20% of gold and silver, that blend. The goal is not to get rich overnight with investing in gold. The goal is to protect your wealth from inflation, currency depreciation, and global chaos. So it should act like a cushion for your portfolio. So now let's talk about the NRI guide for gold and silver investment. How exactly you can buy gold? Physical gold, that's one option. You can buy jewelries, you can buy gold coins. The most traditional route, you buy physical gold either in India or in the country of your residence. If you are living in UAE or Singapore, this actually makes more sense. Gold is competitive in price there. There's no capital gain tax in the UAE. You can hold gold in your local bank locker, so it has some cost associated right now. But here's something interesting that most people don't know anymore about buying gold from Dubai. So now it's not cheaper if you compare it with Indian pricing. Also, since we are talking about gold, so I would like to tell you that if you are visiting India, you are an NRI, a female passenger, you can carry up to 40 grams of gold in terms of jewelry. Male passengers are allowed to carry 20 grams in terms of jewelry, and you can carry gold up to 1 kg, but you will have to pay the duty on that. The current duty is in between 10 to 15% on that. If you have been outside India for at least 6 months, that's still a valid option for some of you. Downside of physical gold. So storage, safety, and when you are selling it in India, there will be capital gain tax that will be applicable. Option 2 is you can buy gold ETFs. So for buying gold ETFs, these are listed on NSE and BSE. You require a demat and trading account to do that. You don't need to worry about the storage. The purity is close to 99.5%. This is regulated by SEBI, so you don't have to worry about the security there. The third option to invest in gold is via mutual fund. So most of the NRIs, they do not have a demat and trading account. So in this case, you can simply complete your KYC either via SBNRI or any other NRI related app which you find over the internet. You can complete your KYC and then you can buy gold via mutual funds. There are ETFs also in which mutual fund invest their money. So you have that option. It's pretty simple. They are treated on long-term and short-term capital basis. So your income will be taxable based on the gains. If you are holding the asset for more than 12 months, then it will be taxed at 12.5%. In case if you are selling it before 12 months, so that will be taxed as per your slab rate. So this was about gold. Talking about silver, it's volatile, but if you are planning to invest into silver, you can invest. You require a demat and trading account because silver is available on NSE and BSE also, from where you can buy. If you do not have a demat and trading account, then in that case, similar to gold, you can complete your KYC on any mutual fund app, and you can buy those funds that invest the money into silver ETFs or who directly invest the money into silver as a commodity. This is all regulated under SEBI, so you don't have to worry about any further regulations. In terms of tax implications, it will be treated similar to gold. So if you are holding the fund for greater than 12 months, it will be treated as long-term capital gain and will be taxed at 12.5%. Anything lesser than that will be treated as short-term capital gain and it will be taxed at your slab rate. Now, you have the option for double taxation avoidance. So in case if you are paying taxes on your capital gain in India, then you can claim the exemption in your country of residence. So there is FTC, foreign tax credits, the taxes that you pay in India, you can take the credits of the same in your country. So let me bring it all together. Here's what 2026 look like for gold and silver as an NRI. Gold is structurally bullish, central banks buying, rate cuts incoming, geopolitical uncertainty at highest level. Correction is possible short term, long term direction is up. Silver is arguable more interesting than gold right now, but be careful. Structural supply deficit is there for silver, that's why it has a good option and opportunity is there. Massive industrial demand from solar, EVs, AI. Gold silver ratio says silver is historically undervalued, higher risk, higher reward. For NRIs, especially gold ETFs and gold mutual fund are the best practical route. SGBs were also allowed, but they do not exist anymore for NRIs. Physical gold has its place, but with limitations, and it attracts a lot of making charges also. So that's exactly why SBNRI exists. We manage over 500 crores in NRI wealth, and our team understands the exact intersection of Indian investment and your overseas life and requirements. I'll see you in the next video. Thank you.